Good evening, all. Ira Epstein with your financial market wrap-up, and this wrap-up is for Wednesday, the 22nd of December, 2021, just after 6 p.m. Central Time. Couple of things. You know, I put these out for you almost every single day. They're out a lot. If you like them, at least give me a thumbs up. Another thing, tell your friends about this. That's what gets us viewership. That's what keeps this going, just so you'll know. I don't get the viewership, I don't need to do it. So we'll see what happens there. The second thing, I've decided that I want you to write me and ask me a market in the financial market section what you'd like me to cover for you. Don't cover ETFs and spiders in here. I'll cover them. I'll do them in the other one. So if you ask me a metal market, if you ask me an interest rate, whatever it is, a little more in depth, I want to do it. Now, I'm not going to do every one every day that you call out, but I'm going to pick them, do them, and I'll call you by the first name. Hey, John asked me this question. What do I think of this? And we're going to do that. So I hope you like that. Let's start that now if you get the chance. Let's talk about where we're at, because Santa Claus has left the Arctic. Now, is he going to make us happy? Oh, that's going to be the big question. You don't have to go up every day once you get into that December time frame of Christmas through that second, third of January period. You're leading up to it with a nice rally. You can get a setback here or two, not a problem. But I think the market has set itself up now for good news, not bad news. What do I mean by that? Most of the pros have cashed out. They're gone. They're in the Bermuda, Jamaica. Makes me want to dance there. All the different things that they're going to go to, or they're going to family here. The last thing they're probably doing is trading the markets in thinner conditions right now, especially if they're traders of size. You're just not going to be able to do it very easily. So that means that the retail trader becomes a bit more important. You get a bit more of these jerky actions in the market that you get through it. It's just a phenomenon that takes place. And what is the retail trader? He's typically bullish. He doesn't like the short side of a market. He's learned that to make money, you buy low, sell high. You don't sell high to buy it back lower. Think of the logic I've just given you. So I start watching to see how they do right after the Christmas holiday. What are they doing in the market? And we're leading up to it, as you know, with a nice rally. Almost every market in the country that's a futures market was up today. The markets that were down were the VIX. That's bullish the stock indices, right? I mean, just think about which markets had backed off. Very few. Which is bullish, the ones that did. So as we go and we look at the S&P, you're sitting here right now at 4690 and a half. You're knocking on the door of all-time highs. If Santa comes next week, could you just take off into those new highs? Well, that chart action isn't bad. Let's look at it that way. When you look at where we're at from an all-time high, it's right here in the 4740s. So we're 50 points away. We're not going to knock on that door that easily. You got to work up to it. The pattern is one, clearly, you've made a higher high and low, and you whipped out the trader, excuse me, that thought up here, you're going to just carry and go through, and down here, I got them, they're all wrong, the market's going down. You also destroyed a pattern that was developing right here that looked to me as though it was an inverted head and shoulder. A shoulder, a head, where you pick it up. But when you got that crazy action, I think that it's a big stretch to say that you've got that pattern any longer. So I'm not comfortable with that. When I look at the swing line study, the swing line's the easiest thing in the world. You have a kid that's 13, 14 years old? Sit him down, teach him the swing line. He'll be able to tell you the trend every time if you teach him right, and the risk associated with the trend. He'll be able to say, Mom, Dad, it's got higher lows, higher highs. Until that number's taken out, the trend is up. Lower high, lower low. Downtrend until that's taken out, the trend is down. Or we have nothing. We have a higher high, lower low. Ask him. And then he'll be able to tell you the number that you have to break out. Learn it yourself. It's so important. When I look at the other part, the line in the sand. Line in the sand is important. It's a philosophy that is based on the moving average theories in a way. The idea of moving averages, you realize they're backward looking. They're not telling you what tomorrow's average is going to be. But what you know is to keep the bias up. If you're in an uptrend, you don't want to close under that average. You want to keep the market up. You also want to see certain things on moving averages like the 18, the short-term average over the medium term, the 100 over the 200. You learn the basics. Oh, that's pretty bullish action. Number two, they're all support levels under the market, and you have none of them above the market, so there's no resistance from a key moving average above the market. There's just support levels. Then you start learning what I tried to teach you all year. If you had to ask me the most important development I gave my followers of this year, 2021, my enhanced Bollinger Band course and how to use it. It's simple. I think it's 8 videos. You learn how to work with this, and you carry it over. It can be spiders, ETFs, stocks, the futures market. It doesn't matter. A chart is a chart. You learn the concept, and it's there all the time. It's one of the most repetitive actions you get on a chart. So you're stuck within the bands right now. 95% of the time, you'll trade within the bands. That's pretty strong. When you break out of them, you attempt to do it typically by riding the band out and certain events happen. Remember, you don't have a trend. You haven't hit an upper and lower Bollinger Band now since the beginning of December. It's almost, 22 days at this point. Let me come over here. Moving averages, we talked about. There's your bands. Now, momentum. The momentum in the market, anytime you have a number over 70, you're overbought. You need a number. The traditional way to do it is 80. I find I want to be ahead of the herd, and it serves me well. The way I teach charting is meant to serve me, because if you believe in me, then it helps you. Does that make sense? If I don't believe it and I just do what you want me to do, well, find somebody else. They'll give you the traditional way. You learn nothing. I see this market as wandering back and forth now, waiting. But again, I do think Santa left. I think he's got everything being packed up. I think that the reindeer are being fed. And when we come back from Christmas, we have 4 days. Do you want to be an aggressive seller in those 4 days? I would say, yeah, if you had a bad piece of news. But I'm not expecting that. The Omicron, how many times you want to keep killing the same story? We know the numbers are going to get worse. We know everything from that. But give me then the economic story. You're not going to hear the Fed say they're going to start tightening at this time of the year. You're going to hear people want to spend. The Congress people that come out, they're going to talk positive. That's my point. You get that type of thinking in the market, and you don't have the pro leaning on the market. He's, I think, gone to Bermuda. When we look at the NASDAQ, it's the same thing. Stock indices are all in this pattern. Higher high, lower low. You came down, challenged the 100-day in the lower Bollinger Band. You pop back up, no follow through. The Dow, higher high, lower low. You challenged the 100-day, the 18, couldn't make it to the Bollinger Band, pop back. Whipsaws. If you think you're following through here to the upside, you didn't. You think you're following through here to the downside, you didn't. Typical, right in front of a major holiday. Then we get to the Russell. Lower low, higher high. Now it's got 3 levels of resistance ahead of it. The gray line is the 200-day moving average of closes, the green, the 100, and the upper Bollinger Band. So the market's got a battleground. Doesn't mean it can't clear it, but it's got resistance right above it. And the VIX, lo and behold, remember what we talked about. Is it going to come back and challenge this number, which it did today? Now, I'm going to be watching this. Both numbers were under 20 today. Yesterday, both numbers were under 20. Not the day before, as you can see. If you embed with getting both numbers tomorrow under 20, that locks in a bear trend. The bear trend says that stocks should be going higher. The flip-flop will be a warning to me if it loses the embedded reading by rallying. That says maybe Santa's stuck somewhere in the North Pole and can't make it to us. Got it? Use this as something of an idea, of giving you a clue as to where you're at. No trend in this market right now. 30-year bonds, well, higher high, lower and low. It held the first challenge of the 100-day average on a return to it. The market's caught in the Bollinger Bands without a trend, higher high, lower low. You have an uptrend in the 10-year note. You're back into the 146 level approximately on the yield, higher highs, higher lows. It turns bearish on any move now under 130.17. That would give you lower highs and lower low and possibly set up for the lower Bollinger Band. The resistance on the upside, right here, at 131.09 to 131.12. When you come to the dollar index, the short-term trend is back down. You have lower highs, lower lows, momentum down, bias down. I think the pros are pressing the short side, those that are trading right now. 96.23 resistance. You knock the bearishness out of the market if you get back over 96.67. Barring that, why not make a run at the lower Bollinger Band? Eurocurrency then should be the flip-flop. Remember, the euro makes up 40% of the weighting index in the dollar index itself. Higher lows, higher highs, until you take out this low, upper Bollinger Band target. I'm not looking for much more than the Bollinger Bands in the dollar or this currency. British pound. Just when you thought you had them, you didn't. If you look, you've got patterns of higher lows, it's held. I was questioning if it was going to hold back here when it was doing this. And in my morning subscriber video, I said, interesting. Will it be able to take that out or rescue itself? Well, it got back to neutral. That means the resistance is the upper Bollinger Band, and it's exactly what the market's done, and it's where you're at. You wouldn't think that with how bad the case is in the UK in terms of Omicron, yet the market's bullish. Overbought as can be at a key resistance level. Bitcoin, you lost the embedded reading. I don't care what now happens. My work says out of shorts. Look for the market to get to the 18-day average of closes, and that's still what I am very much looking for. In the Brent versus WTI crude oil, when I look at the market, the trend is still down. Now, this is interesting because now for you, I've moved March to March, so you haven't seen this. This is now that differential. It's amazing how it hasn't been much more than $1 the further back out you go. When you were looking at Feb, it was much, much wider than that. When you come to the March Brent crude, the rally has gotten over this high, so like so many of the other markets, you're not in a true trend. You have a higher high, lower low pattern, caught in the middle of no man's land, overbought in the Bollinger Bands. Very typical of this time of the year. Same thing in the WTI, overbought, caught up here. January, I think it's the 3rd or 4th, we're going to see a meeting in OPEC. What are they going to do? I think they got to be happy that prices have come all this way back. You broke 21%, if you'll recall, in November. And then you've come back already 10% of that at this point in time. So very important to keep in the back of your mind. Lower low, higher high. Where's that cold weather? It will come. You don't get a winter without it, but we haven't had a lot of it right now. Natural gas. Boy, do I feel good on this trade. This was what you call the honey trade for my traders. They were short this market, and I said, you don't need to lose it exactly. Don't be short going into the end of the year is what I told them. Market came up, and that was it. Worked out nicely. So you put it together, you try to come up with game plans, and that's the name of the game here, and that's what I try to do for you. So if you're interested in learning a lot, go to our website under the word education at www.iraepstein.com. All the education tools are there, including free ones. You learn the pivot points, the Arun indicator, everything that you want to learn is there. Go to the free offers, you'll see what we offer there, and you take it from there. Remember what I said at the beginning? Thumbs up, Ida, please. Tell your friends and write me what you'd like me to cover. That's going to be a new feature for 2022 that we start rolling out. You have a good one.